Today we're going to look into a rarely used trend indicator that works amazingly well. And I don't know why more people don't use this, and it's very different than other trend indicators. So because it's so different, you might get different results than you're currently getting, which probably for most of you would be good. So it's called the Aroon Indicator. And what we're going to do is we're going to be looking at, there's two lines on the Aroon Indicator. The down line, which I've colored in red, and the up line, which I've colored in green. All right, so now what we're looking for is, we're not looking at the cross. This is what a lot of people teach. So first of all, let's get some falsehoods out of the way. If you're just looking for the cross, there's a couple of different things that are taught, and then I think they're all malarkey. So we've got also, one other thing I want to show you is we've got three levels here. We've got the mid-level, which is 50, and then we've got 70 up here, and we've got 30 down here. And the Aroon indicator is a bounded indicator. It can only go up to 100 and down to 0. So, okay, we've got those three horizontal lines. So some people say, wait for one of the lines to cross above or below 50. No, that's bull cookie. All right, so right there, for example, you can see green line crossed above 50. Is that an uptrend? No, that would have been a failed trade. And then here too, you say, oh, okay, well, red crosses down below 50. Should you go short there? Well, no, because then it crosses back above 50, and then it goes down after it crosses above 50. So anyway, all that stuff is malarkey. Some people teach you wait until the red and the green lines cross and then take a trade. And that can work sometimes, but it gets you late to the party, and it's also very dangerous because, again, I'll show you a way that people get hurt with this indicator a lot and how for you to avoid that. So what do you want to look for? So first of all, it is a trend following indicator, and it's different than most trend following indicators or trend indicators. Most trend indicators that are also momentum oscillators, they measure price relative to time. Price relative to time. This one measures time relative to price. Time relative to price, the opposite. And so it's very unique in that way. So the setting that you put it on will determine what the time is. And different people use different times. The default here, I'll show you, the default is normally 25. So that's what I use. I've used 14 as well, very effectively. So you might want to try that one, but that's what I'm using in this example. Now, the signals we do want to take, now that we don't know what we don't want to take, which is what a lot of people teach out there. So what do we want to take? Very well, I'm going to show you right now. So we want to wait for a strong impulse move. Those of you who have heard my teaching before, you know I look for extremes. So the red is bearish, the green is bullish. So what I'm looking for is I'm looking for when red gets up here to the 100. Remember, that is the bounded indicator's highest level it can go. So that is an extreme bearish trend signal. So that's when we look to go short. And here's the second. So that's what we want to do to look to get into our initial entry. Then we want to, for ideal situation, we want to see the green line going down because the trend, we don't want an uptrend, right? So the uptrend indication is going down. The downtrend indication stays up. So we want these two to stay opposite of each other. And then when they converge back together, well, then our signal is over. So that's the basis of it. I'm going to show you I'll show you a couple of other examples here. And I'm going to show you some secret tips that others have at least never shown me that I've never seen. So now we see the green line hit the top. So the bullish Aroon line hits the top of 100. And so sure enough, boom, kablambo, we go to infinity and beyond. Now notice, this is a beautiful signal because we want to watch both lines. Very important you watch both lines, not just one or the other. We want them diametrically opposed. So when we're going long, we want the bullish Aroon indicator up at a high, and we want the bearish one at a low. And again, the low is relative. It means below 30 and above 70. But whichever direction you're trading, you don't want it just to cross 50. You don't want it just to cross 70. You want it to hit smack dab right up here. You want extreme bullishness, and that's what gives you these extreme price actions. This is what you want in order to make the money, honey. Here's what we want to avoid: a danger zone. When you have both of them near the top, actually I'm going to show you two different but related patterns. So when we have both the red and the green line at the top, this is no bueno land. Don't trade that. Okay, they're both showing strength. So how can you have bullish strength and bearish strength concurrently? It makes no sense. And look at what the market does. You got high volatility, right? The price is moving around a lot, and that's what happens. Price will move around a lot, but there's no clear direction. So that is one thing to stay out of. The other thing to stay out of is when you get these two lines moving down together, parallel like this. This also, and you get a shorter pattern there as well. This is death, okay? This is just basically going to be consolidation, noise. It's not going to create a strong trend. Because again, think of it, neither one of them, well, both have gotten to the top, but now both are going down toward the bottom. And we're not trading either one of these at the bottom. We're only looking for, remember, we have a unidirectional pattern. So you just have to decide, all right, which is bullish or bearish by the color of the line. Of course, you can change the colors of the lines if you want to, but the trend signal is only when one of them hits the top, not the bottom. One of them hits the top and not the other. And whichever one it is, that's when you take the trade. Now, there's one other very, very, very important issue here, and that is that this is just a trend indicator. It's a good one. It's great. Test it out. Try it in your charts. But again, trend trading used to be called trend following, and that's really the appropriate term that we should still use today. So in addition to trend trade tools, you need timing tools. These are your scalpel tools. And I gave everybody my market timing indicator who follows me here. And that means you. So you can get my market timing indicator at indicatorwebinar.com, where I will walk you through a free tutorial. By the way, it's all free. And I will show you how to set it up on your charts. Works on pretty much any charting platform. It's actually, for full disclosure, a modification of a current indicator that's already in your charts. So I modify that, and then I'll show you in the tutorial how to trade it. It's like in this tutorial, I was teaching you how to trade the lines, what they mean, and which patterns to trade on the lines. I do that the same with my cycle indicator. Now that indicator will tell you, okay, once we're in a trend, when do we enter? And I mean very specifically to the penny, to the pip, or to the tick. And that's what that is for.